You've been told buying a home is always a good investment, but here's the truth. You think home prices always go up? Think again. Make sure to stick around to the end of this video as we look into why the old advice might not hold up today. That house could lock up your money and drain your savings with hidden phantom costs like maintenance and property taxes, expenses most people never see coming. In many cities, renting can actually cost less than owning when you factor in these extra charges. If you're serious about building wealth, it's time to question what you've always heard and look at the real numbers behind homeownership. The myth of homeownership as a path to wealth. For generations, we've been taught that buying a home is the ultimate financial achievement, a sign you've made it and a step toward building real wealth. It's so ingrained that you'll hear it from parents, friends, and even financial advisors. The idea sounds simple. Make monthly payments, watch your home's value rise, and cash in later. But is this really how it works? Let's look at what actually happens for many homeowners. Take Jonathan and Shalom, a real couple who bought a $730,000 home. They were excited to start their journey as homeowners, believing it was the smart financial move. But after moving in, they found themselves spending 55% of their take-home pay just on the mortgage. That left them with little room for anything else, and no savings to cover the repairs and surprise expenses that started piling up. Instead of feeling financially secure, they felt stretched thin. The truth is, the real costs of homeownership go way beyond your mortgage. Hidden expenses, what experts call phantom costs, can add up quickly. In fact, maintenance, property taxes, and insurance can add 30% to 50% on top of your monthly mortgage payment. These aren't just minor annoyances. Roof replacements, HVAC repairs, and foundation fixes can cost thousands of dollars, and most homeowners don't set aside enough to cover them. To see how these costs can erase the gains from rising home prices, let's break down a real-life example. In 2021, a buyer purchased a condo for $3.695 million. Just over 2 years later, they sold it for $3.8 million. On paper, that's a $155,000 profit. But when you look closer, the story changes. After paying $224,000 in interest, covering transaction costs, and missing out on what they could have earned by investing their down payment elsewhere, the owner actually lost over $795,000. Even though the condo's value went up, the true financial outcome was a huge loss. These aren't rare, worst-case scenarios. They're common realities that often get overlooked. The emotional pull of homeownership is strong. There's pride in owning your own place, and it can feel like a sign of success. For some, it does work out. But the numbers show that for many, the costs can outweigh the benefits, especially if you haven't planned for all the extras that come with owning a home. So what does this mean for you if you're thinking about your own path to wealth? Without a clear understanding of all the costs involved, buying a home can leave you with less flexibility, less savings, and more financial stress than you expected. But what if there's another way? What if the path to building wealth doesn't require you to buy a home at all? Maybe the real question isn't whether you should own or rent, but how you can use your money most effectively to grow your wealth over time. If you're enjoying this video, please hit like and subscribe button and share with your friends and colleagues. Why renting and investing could build more wealth? Let's talk about why renting, when paired with smart investing, could actually be the better way to build wealth. Renting has long been painted as a poor financial choice, but that reputation doesn't hold up when you look at the numbers and the flexibility it offers. Instead of tying up your cash in a house and dealing with all the unpredictable costs, renters can keep their options open and put their money to work elsewhere. A lot of people still ask, why pay your landlord's mortgage when you could be paying your own, or insist that renting is just throwing money away. But here's the reality. Homeowners also throw away money on property taxes, insurance, repairs, and maintenance. These expenses don't build equity, they're just the price of owning. Renters, on the other hand, avoid these phantom costs and can redirect those savings into investments that actually grow their net worth. With rent, you know exactly what your monthly cost is, and you're shielded from surprise expenses. With a mortgage, the payment is just the start. Add in taxes, maintenance, insurance, and the unexpected repairs that always seem to pop up, and your real monthly outlay can climb much higher. And here's where the real opportunity comes in. If you invest the money you save by renting, Instead of spending it on taxes, repairs, and other homeowner expenses, you can put those dollars to work. Put those savings into a low-cost index fund earning an average of 7% a year. And over 30 years, you could end up with over $2.2 million. That's a level of wealth building most homeowners never see, especially when you consider that the average home appreciates at only about 3% a year. If you want to see how this plays out for your own situation, there's a practical tool you should check out: the New York Times Rent versus Buy Calculator. Just plug in your numbers: monthly rent, home price, mortgage details, expected investment returns, and the calculator does the rest. One of its most important insights is this: rent is usually the most you'll ever pay, while a mortgage is just the starting point. The calculator factors in all the hidden expenses that come with owning, so you get a realistic picture of what each choice means for your finances. The bottom line is that renting, when combined with disciplined investing, isn't just a fallback or a temporary solution. It can be a powerful, intentional strategy for building wealth and maintaining financial flexibility. It lets you avoid the stress of surprise costs, gives you the freedom to move or change course when you want, and keeps your money working for you instead of being stuck in a single illiquid asset. Of course, the right choice depends on your own goals and situation, but the idea that renting is always a waste just doesn't hold up when you look at the numbers. Before you make a big decision about where to live, it's worth taking a close look at the real costs and benefits. That way, you can make sure your money is working as hard as possible for your future, not just following what everyone else says is the right path. When you're weighing whether to buy or rent, remember it's not just a financial decision. It's about what actually works for your life. Your total housing costs, including mortgage, property taxes, insurance, and maintenance, should ideally stay below 28 to 32% of your gross monthly income. If you're above that threshold, it's a sign to pause and consider alternatives. Sometimes renting and investing the difference can get you closer to real financial freedom. The American dream isn't just about owning a home. It's about making choices backed by the numbers and your own goals. If you found this helpful, hit like, subscribe, and comment below with your calculator results. We want to hear how the numbers work out for you.